Hey guys, welcome back. So in my last video, I asked you guys a question if you guys would be interested in watching daily recaps, and 90% of the replies were yes. So this week I decided that I'm gonna try doing daily recaps, but I'm not promising anything. At least 2 to 3 videos every single week. Maybe I might do daily recaps depending on how much time it takes me to record, edit this video and post this video online. So yeah, today I actually had a bad start. It would have been a really bad start to this trading recap series, but you will see what happens. So let's straight get on to my trading recap. Let's start with my watch list for the day. Today I had two main stocks on my watch list, Goldman Sachs and Amazon as the main stocks for the day. And then on the secondary watch list, I had Meta, Tesla, NVDA and AMD. I have been tracking NVDA and AMD almost every single day because the price action on these two tech companies has been really good recently. So Goldman Sachs, it was on my watch list. I don't trade this stock often, but they reported earnings. The stock was gapping up. It was gapping up around 4% for the day. It was holding near this 405 zone. You guys can see that the open of the day was around 405, 406, which is interesting because that was the zone that was major support a few weeks ago, and then this zone started acting as resistance right here. So I was watching the hold of 405, 406 zone for a push towards the upside of the open. But the one thing about this stock is that this stock only does 2 to 3 million shares every single day. Being an options trader, I have to look at the volume, because if the stock itself, the underlying asset, does 2 to 3 million shares every single day, that means that the option premiums are going to be very spready off the open. So I have to wait it out of the open, wait for the premiums to settle down, and then decide to take this trade or not. I was also watching Amazon because Amazon was kind of making this bull flag pattern near all-time high. Even though the weekly candle was not really strong last week, we closed like a doji on high volume. So this might actually be a reversal candle for a push downside. But yeah, for today, it was holding pretty strong in the pre-market, so I was watching it for a break above 188.5. But I'm going to show you guys the pre-market action, what happened. So just before the open, we can see that we dropped. This was the last candle, the last 5 minutes candle of the pre-market. I'm going to show you guys a 1 minute candle as well. Let's go in the pre-market action. So we can see that we were holding pretty strong in the pre-market. So I was watching this stock for a push towards the upside, but you guys can see at 9:25 a.m., that is 5 minutes before the market actually opens, we dropped. So I was like, okay, I'm not watching Amazon for a push towards the upside. If it gets near pre-market high, I might look into it. But for the open, the main stock I was focusing on was now GS. So here's the market open. GS actually had a really nice 9:30 a.m. breakout. Had you entered your position at the break of pre-market high, you could have covered your position at the hold of 412, 410 for a nice $2 move on the stock price. But if you trade options, it's a bit difficult to trade options right off the open on a stock after earnings, because you guys can see if you go for like 410 calls, the ask is holding around 6.8 and the bids were holding around 6.0. It's getting better now slowly. That's why it's very important. After the earnings, you need to wait it out of the open, look at the spreads. If you enter at the ask price, 410 calls, and if you exit at the bid price, you lose 15% just on the spreads. And that's why I decided not to execute on the stock. Wait for a pullback, look for a good pullback, look for a good hold of a level, and then I can execute on 415 calls if the spreads tighten up. After the first 2-3 minutes, we saw that we were holding 410 nicely on the tape as well. So I executed on the stock. I took 415 calls. At the moment, the ask is at 4.5, 4.6, the bids at 4.3. So pretty decent trade. I tried to get filled at the mid price, but still, the fill was not the best in the world. My entry was at 4.55 and the bids are holding around 4.5, 4.1 on the drop. But entering this position, I know that I can lose 15% of my position. Because GS, after the earnings, the spreads are very wide. So worst case scenario, I can lose 15% taking 15 contracts. Taking 5 contracts, that means I'm expecting to lose around $300 to $400 on this stock. Then on the next minute itself, we dropped under 410 and I covered my position at a fill price of 3.95, losing approximately $300 on this trade. But as soon as I exited, I saw that the tape is back above 410. Most of the orders are going through above 410. I decided to give it another go. I decided to take another trade on this stock. And then I entered 415 calls. This time I entered 10 contracts because the spreads were pretty decent now, 4.5, 4.3, but they are sometimes spreading up very wide. Sometimes they are really tight. So yeah, it's again part and parcel of trading, but taking 10 contracts, I knew that if this stock goes against me, I can lose $700 to $800. That is again 20% of my investment, worst case scenario. After my entry, it consolidated for a while, and my stop is that if it makes a new 1 minute low, I don't want to be a part of it. So we dropped and made a new 1 minute low. I covered my position at a fill price of 3.7, 3.67. So that means on this trade, I lost another $800, $300 on the first trade, $800 on the second trade. So by this time, I'm down $1,100 within the first 6 minutes of the market open. So yeah, really bad start to the week and really bad start to the trading series. That's not how I wanted the series to start. So now guys, I took 2 losses of the open and my mindset was that, okay, I had a bad start. I saw AMD selling off. I can show you right here as well. So if I open my trading view, so you guys can see Tesla had a nice sell off right here. AMD also had a nice sell off, but after taking two losers of the open, I just wanted to wait for my trade. I wanted to wait for my entry because by the time I exited my GS trade, AMD was a bit extended right here. Tesla was also a bit extended right here. So I was like, okay, I just got off taking 2 losses. I need to wait it out. I had FOMO on Tesla. I had FOMO on AMD, which is pretty normal. But the best thing you can do as a day trader is to just be self-aware of your emotions. And I was self-aware that, okay, I had FOMO on Tesla. I had FOMO on AMD. I took 2 bad losses on GS, but now I just have to be patient and look for my trade, because if the next trade is not executed well, it's gonna mess with my confidence, because at this point of time, preserving my confidence and taking a well executed trade is very important. So after taking 2 losses on GS, I realized that NVDA was holding stronger than the market. You guys can see if I move myself, QQQ had a nice sell-off. It's holding near the VWAP, but NVDA just made a new high of the day. So this stock is clearly showing relative strength compared to the market, and this stock has been strong for quite a while now. Even last week, it was holding stronger than the market. So I started tracking the stock, and I was like, okay, we made a bullish engulfing candle on the 5-minute chart. We have 900 good psychological level on top of us. And then we have 905 really nice technical level on top of us. So if I execute and enter my trade at 895 with the stop loss right under the pre-market high, which is around 895 again, then the risk to reward is there. The risk is maybe 1 point on the underlying asset against me, and the reward is potentially 5 points. Best case scenario, 10 points if it goes to 905. And you guys can see right here, guys, I'm just waiting patiently, right? I have been tracking this stock since 9:42 a.m. At the moment, it's 9:48 a.m. on the time. You guys can see 9:48 a.m. So I have been just tracking the stock. I just want a really good entry. I want to see a dip under 895, and I want that dip to get bought back up, which happened on this candle, 9:48 a.m. candle. We dipped under 895. No big orders went through under 895. A few orders that too closer to 895. We pushed back towards the upside. So I just executed right near 895.7ish, 896 with the stop loss under the new 1-minute low. So if it makes a new 1-minute low, that is my stop loss. So my stop loss is really tight on this trade. I entered 10 contracts. My fill price was 9.05. And if you guys know NVDA, you can easily lose 10% of your investment. But if you guys look at the premiums based on my stop loss, worst case scenario, I'm going to lose like 5%. Because if I exit my position at the break of pre-market high right here, I would have covered my position maybe at 8.6, maybe 8.5, but I think 8.6. That means on 10 contracts, I'm risking $450, which is an amazing trade because my risk is like 5% of my investment and my potential reward is maybe 15-20% if it decides to go for 900 and eventually 905. So after my entry, I had a really good entry. I had no drawdown on this trade. As soon as I entered, the premiums never went against me. They just started to push towards the upside. Just before the break of 900, you guys can see that I was risking $400 on this trade. At the moment, the premiums are holding approximately 2R. You guys can see that the bids were holding around 9.8. So I like to lock in approximately 20 to 30% of my position at 2R. Then I can hold on to my position and maybe cover the remaining 2-3 contracts at 3R, 4R, and potentially maybe 100R as well. Let's see how we do. Just before the break of 900, I covered 2 more contracts at a fill price of, again, like around $9.9, $9.8. So most of these contracts, like entry 9.05, exit average, the first 5 contracts, average exit was around 9.8. So that is again 2R trade. So I covered 50% of my position at 2R. And after the break of 900, we were in business because the premiums pumped all the way to $11. That is approximately 4R. I was risking $50 on the premiums and the premiums are up approximately $200. That is like a 4R nice risk to reward trade. So I covered 2 more contracts at a fill price of $11. Now I'm only left with 3 contracts. So I want to see what happens near 905. Because we can see that 905 is major resistance on the 60 minutes and the 1-day chart. So I actually, in the back of my mind, I know that it might not go for 905, but it's worth the risk to reward again. Just before the break of 905, I covered another contract at a fill price of, I think, I'm going to cover it now, 11.50. So that is nice. Now I'm just holding 2 contracts, and that is very important now. So before the break of 905, if it happens, I'm expecting a pullback. We had a crazy push from 895 to approximately 904. So I'm expecting a pullback now, but now I don't want this stock to come under 900. I want this stock to pull back, but stay above 900. So now for the remaining 2 contracts, my trailing stop loss is 900. And after a few minutes at 9:58 a.m., you guys can see we dipped under 900, but no big orders are going through under 900. Like there's no acceptance under 900. Most of the orders are going through above 900 on this pullback. We can see a lot of green on the tape as well. And most of the orders are going through closer to the ask price. The ask never dropped under 900 as well. So I had a few signs based on the technical level and how this stock is holding stronger than the market to add 2 more contracts to my position. That is amazing, guys. Like if I add to my winner, that is a win in my opinion, right? So that is a really good trade. I added 2 more contracts. Yeah, right here. So you guys can see I am now holding 4 contracts, 2 OG contracts and 2 ads. And now my stop loss for all these, like all the 4 contracts, is that if it makes a new 1-minute low. If we break back under 900, if we close under 900 on this 1-minute chart, I'm going to exit all my 4 contracts. So yeah, so the risk is minimal now and the reward is the break of 905. And as expected, we went above 905. I should have actually taken all my position out right here, because even though it was holding stronger than the market, we had a few signs on the book map, which I'm going to show you guys next, that a few big sellers are stacking near 905. It might not actually continue and break above 905, at least not on this push towards the upside. But you guys know greed, like humans are greedy. So I decided to hold on to my position. But as soon as it made a new 1-minute low right here, I covered 2 contracts at a fill price of 11.8-ish, 11.9-ish. So not a really good winner. And in the next few minutes, we just dropped under 901, 902. So I covered the remaining 2 contracts at a fill price of 9.77. So overall on this trade, I made $1,400. I lost $1,100 on my GS trade. But I'm going to show you guys Bookmap, because Bookmap is really interesting. With the help of Bookmap, you could have actually predicted that, okay, it's going to drop. It's not going to go above 905. So let's take a look at that. So on the Bookmap, we can see that my first entry was right here at the hold of 895. I caught this push towards the upside. On the pullback to 900, I added to my position. I took 2 contracts out right here, the remaining 2 right here. But we had a really good sign on the Bookmap to just exit all the position at 905 and practically catch the high of the day, because after the break of 905, we had a big buyer trying to hold around 904, just above 904. Then we had another big seller at 905. So we had a big seller first at 905. The buyers were able to take those sellers. We had big green dot. Then the volume died down above 905. So no acceptance above 905. We turned back under 905. Found some support around 904. But just after that support, we had another big seller at 905. So imagine the situation. A buyer is trying to, the buyers are trying to break the wall. They finally break the wall once. They're exhausted now. The buyers are exhausted. We don't see any more buying. And now those buyers face another wall at the same situation, at the same point. So the buyers are already exhausted. They won't be able to break that wall. And that's why we flush towards the downside. So this is how Bookmap helps me every single day with my trade executions. And actually, if you guys want to check out Bookmap, there will be a link in the description box below. Click on that link and check out special offers only for the viewers of this channel. So yeah, personally, I should have covered my whole position at 905. But again, could have, would have, should have. That never works in trading. And actually, I think I did a really good job today, because I had 2 losses of the open, and then this one winner was able to compensate for both these losses. So that's how risk to reward works. And at the end of the day, not the best P&L in the world, but it's better than being $1,100 red to start the week with, right? So if you guys have any questions, guys, let me know in the comment section below. If you guys like these kind of recaps, and if you guys want me to continue making these recaps, not promising every single day, but let's see how it goes, let me know in the comment section below. Thank you for watching. And before you go, follow me on Instagram as well. The link will be in the description box below. Thank you for watching, and I will see you guys in the next video.